Hi everyone, this is Daniel here, and today I'll be talking about something that I feel has been quite overlooked in today's property market. Because a lot of people, they want to buy new launch, they want to go into property investments, and they're always looking into things like, near an MRT, near good schools and all that, and they're really fixated on capital appreciation and all that, right? So today I want to go into a topic that is towards rental, the rental strategy. Why? Because there's a lot of investors now, they want to buy a new launch. For example, they know that a 3-bedder, 3+ study is fantastic, very good. Next time can sell for high profit, for example, right? But the price tag is getting a little bit difficult to afford, especially if I'm an investor who's only using one name and I want to buy something purely for investment, not for own stay one. So my question is, if this is my situation, what sort of options are there out there? Must it only be this kind of property type? So I'll share more now. Okay, so in the entire Singapore, right, there are a few areas or districts where the rental yield tends to be on the stronger side. Or should I say, the rental that you can get is on the higher side. And when we want to view rental, actually there's two aspects. One is the rental PSF, that means based on the size that you buy, how much is the rent that you can get, and then also the rental yield. So rental yield will give you an idea on how attractive this investment can be. So these are two very different and important metrics to pay attention to, right? So from this list here, you can see very easily that usually when we're talking about PSF wise, in terms of rental, right, you can see that our District 2, District 3, and then even District 10 also is on the higher side. But in general, I would say our District 1 and District 2, in terms of performance, tend to be on the higher side because they are very close to the employment nodes, like your City Hall, Raffles area, the southern part of Singapore, whereby the major employment nodes are, right? So that's why people who come to Singapore to work, especially those higher earners, they tend to be in these locations. So the only thing with our District 1, District 2 is that many of these locations, it's like the area is filled with skyscrapers, right? All the office buildings and all that. And some tenants or some people, when they live here, they may feel like, my workplace is so near. When I want to go home, I prefer to be a distance away, correct? And they may not want to continue staying in that immediate vicinity. But we still cannot avoid the fact that the rentals are still very, very strong here. So for example, this one, in Tanjong Pagar area, right? Just for an example. Okay, we see, for example, here, Sky Suites and Anson. Okay, you can see a PSF for up to $10.68. Actually, the main thing here, right, that we need to pay attention to is the relationship between the rental and the size. So that's why you cannot just look at the yield alone, right? That's why we have to use this PSF to judge. And you can see that why this one is so high is precisely because the size is smaller. So if the size is smaller and the rental amount, okay, for example, is the same as the rest of the developments, right, then understandably the PSF will change. So using this metric, you can roughly gauge what kind of rentals you can expect from a development around the area, right? So for example, this Sky Suites you see is $10.68, right? And I'm going to pull up a example of this Sky Suites and Anson. Okay, I'm going to show you an example of this Sky Suites and Anson. Here's how the 1-bedder might look like. It's kind of a mix between a studio and a 1-bedder, right? Because you see that the living and the bedroom actually is not really segmented, but it still has its own designated area lah. So this is 365 square feet, and that's including, you see, like your bay window and then the planter area and all that. And what is this renting for? And you can see that, as I've shown you just now, for a 1-bedder, it's roughly around 3,007, 3,008, which translate to roughly around $10.50 per square foot. And then if we were to look around the similar area, we also have Altez and Icon, and because they are larger, right, and if the rents are not so much higher, then definitely we will see the PSF come down, which you can see that the larger the unit, the PSF will look lesser. Moving on, so this has been the talk of the town recently, right? A lot of people were trying to understand about this One Marina Garden. So I also share a little bit of my opinion here. Now, if you were to compare the surrounding for One Marina Gardens, right, we have a couple of them, and you can see that the PSF is kind of like a similar situation whereby you have 500 square feet all the way to about 800 plus, and their PSF is also quite similar, $7 plus, $8 thereabouts. So can we also safely say that for One Marina Gardens that is coming up, that they are maybe able to achieve roughly around $10 PSF as well, which is similar to this one, because Sky Suites actually is rather aged already, but One Marina Gardens, when it comes up, which is directly connected to the MRT and brand new, so potentially it could hit $10 PSF. Quite fair to say, right? Now let's dive deeper into the rental yield portion. So why is it important to look at the rental yield deeper? Is because for any buyer, any investor next time who potentially might buy from you, they'll be looking at this metric very carefully, which is the rental yield that they can get. Because in their minds, they may be sacrificing the potential for capital gain already. So the main source of the income will be coming from the rental. So for example, once again, using the Marina locality, the sale, Marina Bay Residences, Marina One Residences, you can see that the rental yield, right, the range is quite large for one bidder for whatever reason. And I can tell you this, for the ones who are doing lower rental yield on, right, very likely they are the ones who are not able to sell for a profit. So just for the sake of a quick example, for example, if today I were to be buying a one bidder for, let's say, roughly about 1.6 million, and if my rental, right, is only $5,000, this one times 12 equals to 60k, right? And then 60k over my 1.6 mil will be 3.75%. So if today I had a choice between this versus another one, for example, let's say I can get something for 1.3 million on the resale market lah, in the same area, for example, 1.3 million. And then let's say the rental I can get is 4,005 times 12 will be 54,000, right? 54,000 divided by 1.3 million. This one will be 4.1%. Then this one on top, right, is newer, much newer. For example, as an investor, which one would I choose? I think the answer would be pretty clear. And that is why when we are talking about a pure investment unit, purely for rental one, that means not so much focus on the capital gain. That's when we have to dive so deep into the numbers. Okay, let's dive deeper into what the numbers might look like for an investor into this area as a brand new one bidder, assuming $1.25 million. Your down payment easily will be roughly around 350k. And let's talk about costs and, of course, your income. Now, your costs for the first 3 to 4 years, the interest that you incur, right, will be lesser because of the progressive payment scheme. If you're not sure about this, you can contact me, I can explain more. About 35,000 based on this example. And of course, later on, right, when you collect keys, you need to start paying your MCST and all that. So let's say around $200. And also for this example, let's say after you collect keys, right, you're going to rent it out for another 10 years. 10 years rental. And then of course, you also have your property tax. Now it's a little bit high, right, because rents has been going up and all that. Now for the non-occupier one, right, it's quite high. In this example, it's roughly around 9,000 per year. So if you're doing 10 years, that's easily 90k. Okay, and then of course after that you're gonna have your loan. When your loan fully kicks in, then you're gonna be paying the full interest on the loan, right? Across 10 years, that's looking at roughly around $197,000 thereabouts. So across 10 years, if you're renting, let's just say for example 4,005, no issues lah, huh? No issues for 10 years. Assuming for the 10 years, just gonna assume a optimistic situation here, 4,500 times 12 years. You're looking at easily $540,000. So what does it mean to you? Basically, if I take the 540 minus all of the costs, 35k minus my MCSC minus my property tax minus my interest on the loan, 194 divided by initial down payment of roughly around 250, right? You're looking at roughly around 55% across 10 years, which is also roughly around 5.5% per annum. And this is excluding any capital gain, which, as I mentioned, this example here, right, is across 10 years. So in 10 years, can it really grow zero? Personally, I feel unlikely, even if it's a location where it's not so good, right? Because usually when we use a time period of 10 years, no matter where we look, usually we will see some sort of appreciation in the area, especially when it's a developing area. There's going to be more injection of growth into that area and all that. But of course, for this situation, I'm just saying that assuming zero, you still have the chance to be enjoying a 5.5% per annum. Of course, this is not the best or the most exciting form of investment per se, but I feel that this is to each their own. I mean, I have met people or clients on the ground who actually don't mind, or actually they look forward to staying in this area one day. they're excited about staying in this locality. Because as mentioned, right, it's not exactly like, for example, if I were to compare, just for the sake of comparison, to Tanjong Pagar area, that area, some feedback that I have received is that even though they stay there for 10 years, right, because it's surrounded with skyscrapers and offices and all that, so the vibe is rather different. As compared to this Marina South area, it's not the same. It doesn't have that same city office vibe. And in addition to that, there's also those people who are really buying something that they feel is much safer. Maybe they're already done investing their stocks and all their different other asset classes. They already have a share in all of that. And then now they're looking for something that is basically diversification. So these are the options that is available for such investors out there, and definitely there are these kind of people out there. And that is the reason why I'm actually sharing about this topic rather than the usual, oh, we buy something that is, you know, the typical formula and near MRT, near schools and all that. Yes, that is also something very exciting, something very possible for majority of investors out there who are looking to buy a home plus investment. And today here, this is a perfect example of something that is not like that, but still has the opportunity to make sense in terms of the numbers. Because traditionally, this is how a lot of investors have invested last time. Plus, not to forget, another reason why people may be looking at this one bedder is, for example, this is a price tag of 1.25 million. So there are also investors out there who are looking to enter the property market, but they don't have the budget to go for something over 2 million, that kind of thing. Because if you look at a lot of the new launches nowadays, right, yes, the opportunity is exciting there, but the quantum, the budget is perhaps not so palatable for like a single name buyer looking to just invest in property. So what are the other avenues? This is one of it.